Stocks slip after a firm open despite inline US and India inflation prints. As uncertainties in the US drive IT stocks lower, realty as well as auto are the two positive spots and banks outperformed today.
TCS pulls IT services stocks lower after it misses revenue and margin expectations and cites uncertainty about the future. Analysts worry the healthy order book may not entirely translate into revenue.
Just because there's a CEO change, as I was explaining before, it need not mean there's a strategy or structure change. We'll go through things like whatever is required, we will do. I don't expect anything new.
Tata Consultancy Services CEO designate K. Krithivasan says that he won't change anything at the IT services major, and the pronouncement spells continuity for the company.
An AU small finance bank surges in trade after its CEO gets a 3-year extension in term from the RBI. The development raises questions over why IndusInd Bank CEO got an extension of only 2.
ONGC Chairman Anil Kumar Singh tells CNBC-TV18 that the new gas pricing regime is positive and in line with the global price benchmarks. He adds that all new wells will now earn $9.5 to $10 per MMBTU. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar, and with me as always is my co-anchor Pavitra Parekh. Pavitra, good afternoon. So yes, markets opened higher than what we are trading at right now, but there are uncertainties which have creeped in despite some of the macros in line with the market expectations. So yes, macros are the ones which are really putting pressure, but in a very tight range. If you really look at Nifty 50 at the current moment, 17,770 odd levels is just about 40 points of loss on Nifty 50, opening a little above 17,800 levels, and the highest point being just a little over that only. So it's a very tight range, but still it is a red tick. But what is not in the red zone is the financials. The blue chip banks with 0.4% higher in trade is Bank Nifty. So that particular pocket is a pocket of resilience today. And mid caps at the moment are in a flat line, trying to get some direction, but still getting a positive tick. So advance decline ratio pretty much in line and slightly in favor of the advances. And on my screen at the moment, the green tick is coming in from Bajaj Twins, a massive, increase in terms of the rest of the Nifty 50 counters. They are doing much better. And some of the auto counters like Tata Motors, Maruti also faring well today, Pavitra.
Oh, absolutely. In fact, this has been quite the week for the auto pack, right? The index in this week is up almost 3.5%. So it's been a good showing for a lot of these names. Aisha, for instance, is up 9% in just this week. But, in terms of the stock-specific action, it's really not too bad. On the frontline index, it's not too bad, considering that we're getting a near 2% cut on just the Nifty IT index itself. So there is weakness coming through from there. In addition to the large cap names, the likes of Infi, HCL, like you can see on your screen, a lot of the mid cap IT names also suffering. So take a look at LNT, LTI, Mindtree, you have Persistent, Nucleus Software, all of these seeing pretty sharp cuts. Autos, like Nisha pointed out, is doing very well. But some of the smaller banks are seeing cuts. While there is a recovery in the overall banking pack, take a look at names like Bandhan, like CSB, which are still under pressure. So that's something that we will track. Also, banks in general will be in focus now because HDFC Bank is going to declare results on Saturday. So that is important to watch. But let's kickstart the show now with the top news. IT stocks are under pressure, led by TCS, which, like we've been telling you, reported a miss in Q4 earnings. So the IT heavyweight reported a miss both on the revenue as well as on the margin front. The constant currency revenue came in at just 0.6%. This is versus estimates of 1% and far lower than what the company was factoring in earlier this quarter as well. The margin has come in at 24.5% versus estimates of 25% this time around. And the weakness in BFSI has really continued. That is the pocket which really continues to struggle. Growth has slowed to 9.1% on a year-over-year basis. In fact, if you look at growth in this vertical, it has now slowed for the third straight quarter. So that is definitely important to track. The positive, however, for TCS is that the deal wins remain extremely solid. It's come in at over $10 billion. So that's looking very good. And of course, attrition has also moderated. So those are some highlights coming through from the earnings. But let's listen into what outgoing MD and CEO Rajesh Gopinathan as well as CEO designate K. Krithivasan had to tell us on their numbers.
later part of the quarter because of the uncertainty that came around the BFSI sector and its implications on the overall macroeconomic setup. That's where the miss in terms of what we were expecting versus what North America has been growing very strongly for us. If you look over the last 8 quarters, for the first time in a long time after the pandemic, we have actually had a sequential degrowth in North America. So we were thinking that the quarter should come in at somewhere in the 1.5 to 2% range. That would have also met the other side of it. It has come in at 0.6. So that's the extent of the miss. And almost entirely, I would say that I would think North America is where the shift is.
Our exposure to US regional banks is very immaterial. Like in our overall scheme of things. I would say on a revenue basis, it could be less than about 3% of our revenue. It's very immaterial. We own just 3% among banking alone, right? The uncertainty is still lingering and it will be there for some time. So customers are likely to prioritize certain kind of projects over others.
All right, so IT bellwether TCS giving out a trend for the earnings for the IT space, and therefore it is also pulling down the entire IT pack. The other big number from the same space to watch out today is from the big boy Infosys, and that stock is also trending weak going into its earnings. Our in-house IT expert Reema Tendulkar is joining in with the key expectations from Infosys today. Reema, tell us.
Absolutely. So if Infosys commentary echoes that of TCS, where there is a lot of uncertainty and it's difficult to get a demand visibility, I think the street is going to be a bit worried. Let me quickly run you through the key expectations. A dollar revenue growth of just 1.3%, a constant currency revenue growth of 0.4%, but the range of estimates is quite wide. So for Infosys, you've got a Morgan Stanley, which is expecting a negative growth, minus 0.1%, and you've got an Antique expecting more than a 1% constant currency revenue growth. But if the growth is less than 1%, it will be the lowest growth that we've got since the COVID quarter, Q1 FY21. Margins flat at 21.5% and profits also flat on a sequential basis. The key is going to be the FY24 guidance numbers. For FY23, the company is clocking in revenues of 16 to 16.5%. Next year, analysts are saying growth could slow down to 6 to 8%, though there are many on the street who also expect a 5 to 7% growth. The margin guidance is going to be critical. Currently, expectation is that the upper end of the margin guidance is going to be raised to 21 to 23%. What will you watch out for in terms of commentary, particularly BFSI? Because even before this whole regional crisis in the regional banks crisis in the US began, growth rates for BFSI have been slowing down for Infosys. So in Q3, BFSI growth rate was just 5.5% versus an average of close to about 12-13% that it used to see. Recently, 2 presidents of the company stepped down. One, Mohit Joshi, who left to join as the CEO of Tech Mahindra, and you had Ravi Kumar, who joined as the CEO of Cognizant. Also, deal wins. Deal wins for TCS were very strong, and for Infy as well. Last quarter, they were very strong. If the deal wins are strong, it will be a silver lining because it does give you some visibility over the medium term. Back to you.
Reema, thanks a lot for that. But like we've been telling you, the key to track for Infosys is also going to be their guidance and the management commentary. So don't forget to tune in to Infosys' press briefing. It's scheduled at 4:30 p.m. and you can catch it right here on CNBC TV18. So that is on Infosys. But let's move on and talk about the big mover in trade today. That's AU Small Finance Bank. It's up some 16%. And this after the Reserve Bank has approved extension of tenure of the MD and CEO. So Ritu is joining us with all of the details as well as what some brokerages have to say about the stock. They're pretty much all positive. Ritu, take it away.
That's right. RBI has approved the reappointment of Sanjay Agarwal as the MD and CEO of AU Small Finance Bank for a 3-year period until April 2026. And the tenure here is very important. Remember, the board had already approved Sanjay Agarwal's reappointment in January last year. In addition, RBI has also approved the reappointment of Uttam Tibrewal as the whole-time director of the bank for another 3 years. Now, what this does is it removes a big overhang on the stock because in the context of the 1 or 2 year renewals that have been granted by RBI in some recent instances, take IndusInd Bank CEO's case, for example, this 3-year extension for AU Small Finance Bank CEO is definitely a positive outcome. So Kotak Institutional Equities believes that the fresh development addresses a key discussion point for investors, and now the interest is squarely going to shift back on the bank's operating performance. AU has been indicating strong trends in collections and asset quality quality. Advances and deposits growth has also been healthy. Now, Morgan Stanley is overweight on the stock with a target price of 860 rupees. It expects the stock to stop derating given the full tenure extension and a peaking of the interest rate cycle. Going ahead in the next few years, it sees a strong re-rating of the AU stock. Citi has a buy rating on the stock with a target price of 740 rupees. It said that RBI's approval reflects a stance of confidence and expects the stock to unwind and see improved visibility of the bank sustaining 1.9% return on assets.
All right, thanks Ritu for getting us all those details. Let's now focus on the oil and gas space. And remember, the government amended the domestic pricing model of natural gas in line with the recommendations, which remember were made by the Kirit Parikh Committee on Gas Pricing. Now, to discuss the impact of the new gas pricing regime, earlier today we spoke to Arun Kumar Singh, who's the chairman and chief executive officer at ONGC, and he did say that the expectation was in line with what has been really spelled out by the government and is positive for the industry. Listen in.
So effectively from new wells and the intervention wells, ONGC will get 9.5 plus, something between 9.5 to 10. So depending on what price crude varies. And this part, new wells, you may be aware that every year 8 to 10% production gets added for new wells. Ultimately, what's happening? It is 10% of crude price plus 20% you get on account of this, new wells. So any new investor is going to get 12% in India of the crude price, which is the international average. Today, gas price would get calibrated if it remains linked to crude. The slope of 12 is considered universal when you link it with crude.
All right, that is the ONGC chairman talking about the impact of the new Kirit Parikh panel recommendations on gas pricing as well as the new norms that have kicked in now. But with that, we do need to get into a short break. When we come back, inflation has slowed to a 15-month low in March, while the industrial output growth in February is looking quite good at 5.6%. All of the numbers when we come back. Welcome back. You're still tuned into Business Lunch here on CNBC-TV18, and let's now focus on some important macro data that came through yesterday. Inflation has slowed to a 15-month low. This is for the month of March. So the consumer price index has dropped to 5.66%, and this is largely owing to the sharp decline that we've seen in food prices, as well as, of course, a favorable base effect. On the industrial output, we've seen a 5.6% growth in February, which is pretty much in line with what was expected. So Lata is here to round up all of the numbers for us. Lata?
Yes, sir. Inflation is not only in line with market expectation, the big relief is it's way below the 6% threshold, which the MPC is, mandated to keep inflation below. So 5.66, that way is a big relief for RBI and MPC, considering that they have paused. The reasons are not are not a mystery. After all, there was a base effect. March of 2022, prices had gone through the roof, food, edible oils and cereals and wheat because of the Ukraine war. So base effect was anyway going to bring the inflation down. The additional cause of relief for the Reserve Bank and the country is that cereals are down. That was the big fear, that because of the heat wave or the unseasonal rains, whether the cereal prices would go up. The fact that they've gone down month on month is a big relief. For edible oils, were always expected to be lower. That's another factor pulling it down. Perhaps the only fly in the ointment is milk prices. They are up 0.6% month on month, but that was on expected lines. Pulses are also higher. So really there is a protein inflation element for sure. The bigger relief is that core inflation is down to 5.8. RBI has been repeatedly pointing out to the persistent core. So this will again come as a relief. Overall, it kind of vindicates the Reserve Bank stand that maybe we should pause and look ahead. Now, the expectation is that both in April and May, inflation will fall below the 5% mark also. It will be 4 point something because of a huge base effect. April of 2022 was 7.79% inflation. So we will definitely get a base that will push the inflation closer to the 4% mark. So unlikely the Reserve Bank is going to raise rates in the June meeting. So clearly it looks like the peak of the current cycle has been reached, at least as of now. A word on the IIP number, it's a good number, 5.6%. It is on expected lines, but what is important to note is it is investment heavy. Infrastructure and capital goods are the two elements that have done very well, including power. And the ones that have not done very well are consumer durables and even consumer non-durables. Although it shows a growth, it's a very low base, so we shouldn't be impressed. Consumption is still weak, you will have to admit. That perhaps is the only disturbing element in the macroeconomic numbers.
All right. Thanks, Lata, for that. Of course, the big thing would be the RBI's next policy and whether the pause really happens and when the trend reversal will happen in terms of interest rate is a big question on everybody's mind. And in fact, we spoke to some experts also earlier today, and we spoke to Shantanu Sengupta, the India economist at Goldman Sachs, who doesn't see the rate cuts this year, but 50 basis points rate move from the RBI next year. Listen in.
We think that rates in India, policy rates in India have peaked. We think that CPI inflation will remain below 6%, which is the upper end of the target band for the rest of the year, and the RBI therefore remains on hold, in our view, till the end of 2023. I think the encouraging news from yesterday's print was that core inflation came down, especially core goods, which we were anticipating to come down maybe a month down the line. That fell from our estimate of 7.3% to 7%. Core services also came in slightly lower, despite housing going up a shade. So I think from core inflation point of view, RBI will take this data very positively, and we therefore expect to hold till the end of the year.
Welcome back. You're watching Business Lunch. Now, in an exciting news for Apple fans, well, the company is set to open its first retail store in Mumbai on 18th of April, and a second outlet will be opened in Delhi on 20th of April. Apple CEO Tim Cook will also be in Mumbai to officially open the store to the customers. Our colleague Shibani is right here to tell us about all the exciting details. So Shibani, a lot is lined up and we are all looking forward to that, because in the studio I think we have a few apples amongst ourselves. Yes. But looks like for Apple, India is a big market too, with so much focus now.
Yes, absolutely. And this in fact will be their first flagship store in India, which will be in Mumbai. It is, if you would have seen the pictures, it is the Kali Pili theme store pictures that have been revealed so far. And it's a fairly big store. Now, Apple Store, as compared to, the Apple resellers that we are used to, is much, much different. First, it's all about experience. You get to experience the Apple products in the store. And they are almost the same. Any store that you go to, whether it's New York, whether it's Dubai, whether it's Singapore, all stores almost look similar. You have free Wi-Fi access in the store so that you can actually get to experience the product through and through while you're there, and there is no pressure to purchase. Then you can actually buy the product online and, go to the store and pick it up. That's another facility which is available at Apple stores. Then they have several initiatives running at their flagship stores across the world. One of them, and one of the key initiatives, is today at Apple, where they get in their talent, their employees to conduct workshops for Apple users. Also, they get in experts, let's say photography experts. So how to master photography on your iPhone is something that, is touched upon at this today at Apple initiative. And the highlight of these Apple stores across the world is their service and after service. From installing your iPhones or devices that you purchase at Apple Store to the after sales service, whether you're having an issue. I have seen people actually get a replacement for their devices within like a few seconds of just taking the device to the Apple Store. So the experience of Indian consumers, which has been limited to the Apple resellers and the multi-brand outlets, will be now you will get a wholesome Apple retail experience through these stores in Mumbai and Delhi.
Oh, that sounds so exciting. And you said there are workshops on photography, on, the music. So I'm sure it'll be fun for all of us to visit and check it out. And there's one in Mumbai and Delhi. So that's going to be exciting for any Apple user. But sticking with this, ahead of Apple CEO Tim Cook's visit, we've also learned that the Indian government may be favorably considering proposals to reduce, customs duty on high-end phones and components. So sources are saying that officials would also seek details from Apple CEO Tim Cook on the company's indigenization roadmap for India after the PLI scheme does end. So Parikshit is here with more on this. Parikshit, what are you picking up?
Well, reduction of basic customs duty and slashing the duty on more mobile phone components has been a key industry demand for the last few months. And now we believe, just ahead of Apple CEO Tim Cook's visit, this demand is being favorably considered. Now, why is this important? The current basic customs duty on imported mobile phones is 20% across the board. The industry believes that this is leading to smuggling. It's not really encouraging domestic manufacturing, and it needs to be a flat rate of 5,000 to 8,000 rupees for high-end mobile phones only. That is, phones costing over 25 to 30,000 rupees. So this is a demand that the government is now considering favorably, but a final decision is yet to be taken. Also, there have been demands for slashing import duty on more mobile phone components so that more manufacturing can take place in India. So this demand is also being considered, is what we are told. And all this could help high-end mobile phone makers like Apple, for that matter. There is also a lot of curiosity about what Indian officials would like to know from Tim Cook. Remember, Tim Cook is visiting for the first time in 7 years, and he's expected to visit a whole host of senior officials. Well, officials would like to know about the extent of Apple's indigenization in India currently. They would urge them to manufacture and source more from India. They would also want to know Apple's commitment to India after the PLI scheme ends in 2026 or 2027. And they would urge Apple to manufacture 14 Pro, 14 Pro Max. And they would also want to know what is really stopping Apple from moving iPad production to India.
All right, India wants those productions to come here and be more indigenized. Thanks so much, Parikshit. With that, completely out of time on Business Lunch, but Cap Radar comes up next. Stay tuned.